presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks, to the Futures Hours for TFNN. And today I want to start the show by, talking a little bit about the stock market because we are rallying right up into that gap that we talked about yesterday. We've made the 61% retracement in the S&P cash. We've made it in the S&P futures, and we're almost at the 786 retracement in the NASDAQ, and we're just about there at the 61% retracement on the New York Stock Exchange Index. I know that we have, the Greek thing today, whatever that is, and I think that's pretty much into the market where the people are willing to accept a, very small amount of the money that they put up, and people are thinking that's bullish. So anyway, that's just the way it looks, so we'll have to wait and see. And that's primarily the, where we are in the stock market. I will post all those into Tiger TV, but I wanted to start out talking about the event that we have coming up. Today's the full moon, by the way, but the really big event comes in about 12 to 14 days when we have the spring equinox, and this is going to be on the 20th of March. And at that same time, we have a super full moon. The super full moon is due on the super new moon is due on the 22nd, and we have many things happening cycle-wise that time. We also have a Bradley date along with the other things that we have, and so this is really going to be a big time that's coming up here in a couple of weeks. It could start at any time. Now remember, the equinox is where the Earth is actually tilting. It happens twice a year. We have a spring equinox and we have an autumn equinox. And I particularly had an interest in the autumn equinox. I think I've mentioned this story before, but when I was doing the book, Astrocycles, A Trader's Viewpoint, I hadn't quite published it yet, but I had a chance to go into the lower Mexico, almost into the practice at the very end of the peninsula down there, into the Mayan jungle, and to the Chichen Itza pyramid. This is the one you see on a lot of calendars and stuff. It's a pyramid that has all the steps going up the four sides. And the interesting part of that is that on the equinox in September, it's usually on the 22nd or 23rd of September, the sun, as it hits directly above at noon, and moves from east to west, the sun forms little 45-degree angles on each of the steps as it moves down from from east to west. And as the sun moves, these little triangles form a thing that looks exactly like a snake that goes all the way down the pyramid until it looks like it goes right into the jungle itself. It's a big thing that happens there. It has there's about 250,000 people there at that time, and it is really something to see. And remember, this was thousands of years ago, a couple thousand years ago is when they built this, and so it's really amazing that someone was able to build something that would be able to, pick it up that accurate. So this is what we have occurring. The last time we had this type of occurrence, where the supermoon was occurring on the equinox, was very similar to where we were on March 11th last year, and that's the thing that really made the Japanese earthquake and tsunami occur. At least that's what the scientists said. So we've got something that big occurring in March of this coming in a couple of weeks. So it's going to be interesting to see this. Now remember, Pythagoras, he knew about equinoxes and solstices, back in 600 BC. So he was way ahead of all this stuff. Unfortunately, people didn't believe him. He was pretty much banished because he was so smart, and everybody was just absolutely scared to death of him. And so he went in supposedly underground and did a lot of this stuff. But he printed a lot of he didn't print. He wrote, papers about the Earth being round and the fact that distance between the Earth and the Moon and all these things. And of course, being the father of geometry is a pretty big handle to hold anyway. But he was the first man to use the square root of numbers, and so this is why we're watching this. This is a huge cycle that we have, folks. I'll be talking about more on it on my show next Wednesday, of course. And I'll try to do a little bit each day. I've got some more research to do on it, but it really looks interesting what we have coming up here with the Bradley date. Whether anything happens with this Greek thing today or not, I really don't think it makes any difference, and I think it's the same thing with the jobs report tomorrow. It's just something that they have, they're able to look at and, to talk about in the news, because this is how they sell advertising, so we'll see. I don't know. Anyway, we want to keep an eye on what the stock market's doing now, because we have had these retracements occur in the S&P, and we've had it in the NASDAQ, and the NASDAQ is very close to the 786 retracement of this move that we have from the big move down. And we said that, we have to watch how the market comes in to this gap area, and this is, in fact, what it is doing. It's getting right into that gap area, and this is, what we were hoping would happen. And if, in fact, it works this way, then this is what we expect. So the S&P cash has made it. We're right there right now. So, we're going to see if, in fact, these are going to, stay in this area here, or that it's going to break out to the upside, with some types of bullish news from Greece, if that, in fact, means everything. They pretty much, told everybody what is going to happen. The question is, they keep you hanging on whether it's going to be a 60% or 75%, whatever those numbers are. Frankly, I don't really care. I mean, I'm interested more in what really happens, to the market than anything else. Now, there's one particular market. Actually, there's two: the silver and the gold, that I'd really like to focus on because this is the commodity hour, and I really believe that we're at a really, really critical level here in the gold and silver. The first thing we want to do is we want to take a look at the gold and silver index. And the reason why we want to do that is because the market has made three lower tops, and we have completed, yesterday we completed a bullish Gartley pattern at the 61% retracement, and we've held that level so far. So as long as we can hold the levels that we made this week in the gold and silver index, it's starting to begin a positive bias. The reason for that is we are having, we've finally had our second higher bottom now. This is the first time we've had this since the market started moving down, way back in December of last year. We had 1, 2, 3, 4, 5 lower tops, and now we finally had a couple of higher bottoms here. So we have a possibility that this market is getting ready to, move to the upside. But it is incredibly important that we hold this level, where we are right now. And so we'll just wait and see, and see if it's going to, hold this level, and then we will wait and see what's happening. We have some divergences here, though, in the gold and silver index, along with the gold and silver, that I think are important to talk about. The first one I wanted to bring up is the ETF for the gold market. That's the GLD that we look at quite a bit. And I want to show you the relationship between what happened with the GLD on this little bit of a rally after the big drop that we had since March. We have had hardly any rally at all in GLD. It has just moved. It hasn't even moved to the 10% level, and usually you would expect it to get to the 38% level. Now, in contrast to that, if we take a look at what the actual gold did at that particular time, and this is what we want to look at now, because gold, the actual physical commodity itself, has made a perfect bearish Gartley up here at the 1703 level. And in comparison, if you go into Tiger TV and take a look at the gold versus the GLD, which is the ETF for gold, the ETF for gold didn't even move at all. I mean, it hasn't even bounced, more than just a few pennies. I mean, really, it's just been, very, very discouraging if you're bullish this, because, if you're in the gold futures itself, you've had a pretty good, correction, to the upside. You came back to the 61% retracement, which is a good sign. And so this is what we're really trying to do when we look at these, is to put them all together. Now, if we go in and take a look at silver, because we want to make the comparison between both of these precious metals, because they are traded, very closely. As in other words, they have a high correlation. But, the silver market has still been in a downtrend. We stopped exactly at that 61% retracement when we got up there last week, and then we had the big sell-off. We only came down to the 382 retracement of that move. That took about 5 days to make that to that level. And yet yesterday we couldn't get much of a rally, to even come around to make any type of a move to the upside. In fact, silver is actually trading down on the day today, with the gold to be up. So this is not, really bullish action. That doesn't mean it can't be. But right now you have some big question marks. And if we don't get above 1703 today in the spot gold, and we get above, and it starts to work lower, this is going to say that this bearishness that we're having in silver and gold is still, going to the downside. Because in silver, ever since we topped back in April 25th, we've been down, so many lower highs, stopping both at the 618 retracements, the first one on August 22nd and the one that we just had just recently. So all of that, makes it line up that we're very close to something really big happening. If you wanted to be a buyer here, this is a very low-risk buy, because all you have to do is to risk, the lows that we made just the other day. I mean, that's my opinion. If we go below that, there's something, really, really dramatically wrong with the bullish sides of these markets. And we're very close, because we've completed this bullish Gartley in the XAU, the gold and silver index. We've completed it also in the gold bug index, the HUI. All of those have completed. The XAU, like we mentioned before, has had the higher bottoms now for the first time. So this is a possibility that the turn comes up. Now, the question that someone had asked me was, well, will this be affected with the thing that's happening in Greece? Frankly, folks, I have no idea. I mean, nobody else does either. Whether anybody, is going to be a flight to quality in the gold or silver, nobody really knows that. We just know that this is pretty much in the markets, what's happened with Greece, and so we don't really have to, concern ourselves with it. There'll be some wild reaction, pretty much like there'll be tomorrow with the jobs report. Everybody will be job-owning, what they think these reports are going to do, and, it's just pretty much, the same thing that they do all the time. I'm just looking at the numbers, trying to figure out that, whether we're getting ready to turn here, turn down in the stocks, and whether these metals are getting ready, to move to the upside. So we'll have a better idea, what's going to happen. After the break, we're going to cover some more commodities here, especially corn and cattle and a few other things. So if you have any questions, it's 877-927-6648.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best-kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Seven 927-6648, and we want to talk a little bit about the cattle market because last week we didn't get a chance to really get into it very much. We were looking for a potential for cattle to turn up in here because we had a huge butterfly pattern coming in at that 130 level, and we had another 3-drive pattern. In fact, so there were 2 very large butterflies. If you get a chance to go into Tiger TV and take a look at it, up into that 130 area, you know, they got to 131, and now they've broken about a nickel. And that gap down that we had just a couple of days ago might mean something. I'm not quite sure yet. It's still early to tell, just like it was in the stock market. You just can't tell by one day, but at least the pattern has completed. The question is, how much of a correction is it going to give us? And that no one knows, so we just have to wait to see how the market unfolds and gives us a better idea of what we're looking at. Now, a lot of the agricultural commodities have beginning to, turn down. And so we have to take a look at that because, we had some pretty significant levels of resistance coming in on soybeans this past week. And, we also have, the corn to look at because, that's our major crop that we deal with each year in the United States. And that's something that I think that all of us, we all use the corn products. There's no question about that. And so we will take a really good look at the corn market. And I'm having just a slight technical problem here. If you'll bear with me just a second. It's a little bit. I'm trying to get the chart so that it will fit a little bit better on the screen for you folks in Tiger TV to get an idea of, where we are, with this. And I think this is about as good as it's going to get right now. If you'll hold on just a second. Oh boy, this is tough when you have technical problems. And believe me, I am emotionally challenged when I have to do the technical part of this. Oh, brother. The good part is I'm not. Okay, that's close enough. I think we'll be able to get a pretty good idea of where we stand here. Okay, I'm going to bring in the chart for corn, and we're ready to start planting pretty soon. We're almost into the planting area. That'll start sometime in April. They'll start doing the printing, but we've had the big consolidation now between January and March. We made a double top a week or so ago, and now what's happened is we have actually come down and made a 786 retracement of the low we made in the middle of February, around the 16th of February. We've come down on a big wide-ranging bar yesterday, and today it's down also. So that's telling us that we're probably going to go a little bit lower in corn. Now, if that's related to the other commodities that we're looking at, like soybeans and wheat and some of the others, and with cattle topping like this could mean that the people that are out there that are spending the money are not, buying nearly as much as what people are assuming that they're buying, and that could be a reasoning for, the market, the stock market to sell off. Remember, in 2007, the stock market turned first, and then the commodity markets, turned shortly thereafter. And so this is why you want to keep an eye on, these things as they occur, because, we have completed some pretty major corrections in a lot of these commodities, especially in the soybeans, which is also, a big component of our agricultural economy. And the beans have gone up to the 61% retracement. They haven't sold off nearly as much as corn. They've still held there for the last few days, and but the numbers are there. And if we get a sell-off in corn and soybeans, I would certainly like to be a buyer of soybeans if they could back off $1 a bushel, and I would look to be a buyer of corn if it could back off about 50 cents a bushel. Now, I had someone ask me a question. I talked about cycles when we first started the show today, and I mentioned March, and it seems that there was a little confusion of what I was trying to say. I'm going to just give you a quick recap, okay? We have the new moon coming in on the 22nd of March. We have what they call a super full moon coming in on the 19th of March. That's where several of the things come together, and they call it a super full moon because of the gravitational pull that it has. The equinox comes in on the spring equinox comes in on the 20th of March. So that sets up a timing band between the 19th of March to the 20th of March. It could happen at any time because these things are so powerful that we have the new moon actually is coming in on the 22nd of March. So and there's a full moon today, by the way. I forgot to mention that. But the main thing is the all of this is coming together at the same time that we have these solar flares. I want to talk a little bit more about the solar flares as we get into this a little bit more. So bear with me, and 877-927-6648.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and Forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we were talking about the cycles that are occurring between the 19th and 22nd of March. The Bradley date, there's one on the 16th, but there's also the one on the 20th. It is actually comes in between. There's several days it could hit. Any one of those between the 20th and 24th could be something pretty big. And remember, the Bradley is pretty good, but it's not foolproof. In fact, none of these things are. And on these solar flares and things that we're seeing and you read about, and they're on the news all the time, how they affect the market is I have no idea. All I know is that there are a lot of energy that's happening at that time, and it lasts for a long time. It's the equivalent of many, many nuclear explosions that happen on the sun, and by the time it gets to us, a lot of it is dissipated, but it still affects, a lot of different things in the weather, and of course it does. But, it's just we don't know what the effect of the market is. I'm basically trying to look at the patterns. The patterns, to me, still look like we're getting ready to head down. We're over these major cycles. It's going to take one heck of a move to the upside for me to say, sayonara, to the bearish side, but there are so few people, that are bearish now. It's just a matter of, whether I'm going to be, right on this or not, but, we'll just have to, wait and see if this is in fact, going to happen to the downside. Now, getting back to the agricultural commodities, I posted into the Tiger TV the chart for wheat. And, wheat is one of the staples of our business, in commodities. We have corn, wheat, and soybeans, and wheat is very good for bread and pasta, which everyone needs. And so we had a huge gap down 2 days ago, and then we had another gap down today in wheat. And so the cycle that occurred, that big AB equals CD pattern that we posted in there, and then we had the bearish Gartley that occurred, back on the 27th when I had Dr. Steve Shapiro on as a guest. That was the high of that move, and it's dropped, well over 40 cents a bushel up until that time. So that's telling us that some of these, agricultural commodities are actually turning down. Now, whether that'll be affected by, the gold and silver and crude oil and things like that, we don't know, because each of those, is a separate indicator of the things that we're looking at. So what we're trying to do is just cover them one at a time, as we go through here to see, what the overall, scenario is for these things. And right now, we've hit some type of a major top in wheat and in corn. And, whether soybeans follows behind it or not, we have to wait and see. But until that happens, we have to assume that, we have, still in a bull market. And if we get enough of a pullback in wheat and corn, we'd certainly want to be able to, want to be a buyer of that at that particular time. Now, I've had a question about the natural gas, because we talked about that on yesterday's show, and we want to cover it again because it's making new lows. And, I mentioned on Wednesday's show yesterday that this thing looked like it wanted to go, a lot more to the downside. And it certainly appears that, we're getting that choice now, that it looks like we've got another, 12 to 14 cents to go to the downside on the natural gas. So if we can be patient here, we might be able to get it down into the level of around $2.10 per cubic feet, and we'll see if that's the case. The ETF for this, the UNG, I looked at that. Someone corrected me, and it is a ETF for natural gas. Has nothing to do with the stocks, from what I could read. The difference is it's incredibly weaker than the overall natural gas futures themselves. Now, I don't know whether that's because of the charges that are available to people in the that do the ETFs. I'm not sure exactly how that works, but we have, we're down into the area now where we were talking about just a few days ago that we would get into this low 1700 area, or $17 per share in the market, and we're getting very close to that spot right now. We need to get down just a little bit lower, I think into that low 1725 area, and that will give us a chance to be at a spot where we want to be a buyer of that. I'm going to post the UNG into the Tiger Den, Tiger TV, so you'll be able to take a look at it. And I'm having a little trouble with my my little tiny mouse here. So we will take a look at this, and we'll get an idea if this is going to hold this level. It's about 60 cents away in the natural gas if it's going to hold this level. But you can see the UNG has taken out the lows from last February 17th, and we haven't even made a double bottom in the futures yet. So this is a huge difference in these, and this is the same thing that were happening in gold and silver now. The silver ETF is not even moving at all. The GLD is not even moving at all, and yet the futures are. So you can't participate, in the futures market with these ETFs sometimes just because of the fact that they don't trade tick for tick. Why that is, I'm not sure. Maybe that's, why I'm not a big fan of ETFs. But frankly, that's something that, you got to keep an eye on, that why it doesn't really, works. I don't know. We'll have to just wait and see. All I know is it looks like we're going lower in the natural gas. We gapped down last week on a Friday, I believe, and that set up a much lower price objective, and so that's what we're waiting to see on the downside, if in fact we can get to that spot. I've always mentioned that I don't understand ETFs, so when someone asks me a question about these, I try to research it the best I can. But there's still a mystery to me. I mean, when I started trading, we only had about 14 things to trade in the commodity markets, and I think now someone told me that if you looked at the different options that we have in all the different markets. There's over 250,000 different things that you can trade at any one time, using spreads and, arbitrage and stuff like that. So, I mean, it's just, mind-boggling the volume that we have in some of these things. So we'll have to, keep in mind that I don't know what I'm talking about when I'm doing when someone asks me to take a look at the ETF. I can tell you about the chart. The charts I understand. I have no problem with that. But the underlying vehicle itself, is a mystery to me most of the time, and that's why I try not to, get too involved with it. Now, I know we're having a pretty good sell-off today in the Treasury bond market, and we've been waiting on the TBT to get down to this level of $16.80. Maybe a lot of it will have to do with what happens with Greece now, but we'll have to wait and see if the TBT is going to make it to this point. But right now we've just been in this long consolidation. I'm going to give it some more time, probably through the end of March. And if we're not filled by the end of March, and the market does start to move down, it's telling me that interest rates have finally topped. I would have missed the top by a couple of points in the futures, but we'll still get a chance to trade it because the whole world is saturated. They want debt. I mean, look, they got Italian 2-year notes are down to 2%, and it's just really amazing the quantity of debt that people want to take on, and I just don't understand. I mean, they're loaning money out at rates that seem unconscionable. I mean, I just don't understand it, but this is where prices really are, so we have to respect that. But the long-term chart in bonds, to me, is making one of the major tops of my trading career. And when I first started in this business, really doing it full time, which was in the the early part of the latter part of the 1960s, early part of 1970s, interest rates were, very, very high. I should relate this story to you because this is how Drexel Burnham got to be quite famous. Mike Milken went to school in Philadelphia at the Wharton School of Business, and when he got out, I believe it was 1972 or 73, he made a proposal to Drexel Burnham saying that, the interest rates were so high, and they were going higher because they didn't top until 1981, and young companies like in the NASDAQ, which was just starting at that time, 1972, and any of the small caps, they couldn't get money. I mean, they literally couldn't go to the bond market and get money like anybody else or go to the bank. So what they had was junk bonds, and what Milken's idea was to change the idea of junk bonds to high-yield bonds. In other words, they were no longer junk; they were now called high-yielding bonds. And so they made a whole boutique firm from Drexel Burnham about that, and Milken moved to Beverly Hills, and I came on into the commodity department in 1976. He'd already been there a couple of years, and he was already on fire. I mean, he was making so much money. In 1 year, I believe 1978, he made more money than the McDonald's Corporation, personally. Unfortunately, a few years later, he had to go to jail for 18 months for insider trading, but that had nothing to do with the amount of money that he made when he outperformed, McDonald's that one particular year. But that was how that whole thing started, is that they converted people into thinking that these were no longer junk, that they were actually, really, better. They were just high-yielding, but they weren't nearly as bad as the junk. Many of these things never made it to the trough. I mean, they went under, and people lost, a great deal of money in some of these because the companies didn't quite make it. But it still allowed a lot of companies to, to flourish and become, relatively successful, given the fact that they were able to get the financing. I have to tell you a funny story here. I hope I have it's one of my favorite stories, as a matter of fact. I actually knew the first assistant to Henry Kaufman, who was at Salomon Brothers at the time. He was he was a chief economist and PhD. He's still alive, and what happened was Kaufman was at the meeting with Salomon Brothers, and Salomon Brothers at that time was far, far bigger than Goldman Sachs. They were probably the number one, firm on the street, and they were having a partners meeting to determine whether they should go into junk bonds. And Henry Kaufman got up and said, folks, he said, if we go into junk bonds, he said, I will sell my partnership at 50 cents on the dollar today to anybody that wants to buy it. And with that, they took a vote, and they said, well, it looks like we're not going to be going into junk bonds, and they didn't do it, and it saved them, a lot of pain and heartache, over the years. So here was a man that stood up for what he thought was right, and it turned out to be right for him and also the firm. So I'm not saying anything is bad about junk bonds. It's just that some of them were really junk. And, we're into that same situation now where some of these things that people are buying are that. As those of you that happen to own Greek bonds, you'll realize that you're going to get just a few cents on the dollar. And not only that, but what's happening with these bonds is you have to take a different type of bond today. They're giving you one with a longer maturity and a lower interest rate, and you take less principal, plus you have actually a lower quality bond. So that's not a good thing no matter what happens, but it looks like the market's telling you that it wants to be bullish today, so we'll wait and see. All I know is that we got these cycles coming in. All these patterns are still here, and we're having a little bit of bounce today, and then we'll probably have a little bit of bounce tomorrow on a great jobs report number. We'll have to wait and see. But anyway, that's what we're looking at in the bond market. I still believe this 140 level in the June bonds is very critical support, and we need to hold that because if we do not hold that, that's going to be breaking down over a long period of time. It's going to be telling us that we are at a level where we're really breaking to the downside. And if that does in fact occur, then we'll be looking at something that would be a little bit more sinister as far as interest rates going higher. I don't know why that would be bullish to the market, but in fact it might be perceived as bullish for the market. I don't really know the answer to that, but the 140 level is a pretty critical level. That's the low we made in just a few days ago, about a week ago. Today what we've done is we've tested the 786 of the range of the week down at that 140.20 level, and we'll have to wait and see. But frankly, if they're willing to buy the junk in Greece, I don't know why they wouldn't want to buy at least the 30-year bonds that are yielding, I think, at 2.9% or something, which is a very, very small amount, given the fact that, it's 30 years. I mean, how would anybody lend money out for 30 years at that percentage? I don't really know. So we'll have to, just to wait and see, what happens with this Greek thing. And it's just a few more hours. I think it's 3 more hours, and the final thing will be done. I don't know what the ramifications are going to be, but frankly, nobody else does either. So we'll wait and see. The euro is strong coming into this, so maybe somebody does know something, but whether it's discounted by the market or not, I'm not actually sure of that. So we'll have to, just wait and see what happens. But by tomorrow, and of course I'm not going to be on tomorrow, but, tomorrow's close is going to be very important, because if we, explode to the upside, like being up several hundred points in the Dow and up, 40 points or so in the S&P and up 60 or something in the NASDAQ, and the whole world gets bullish, then this old cowboy is going to have to eat some crow and say, okay, I'll stand aside, but I'm only going to stand aside for a week or so, because I think we're coming into something that is really, really nasty to the downside. So whether that's going to be right or not, we'll just have to wait and see if this is going to be the case. If you have any questions, you can call in at 877-927-6648. And after the break, we want to recap a few of these commodities and also talk a little bit more about the gold and the silver.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry, or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and we need to talk a little bit about the euro and the U.S. dollar because this is certainly going to be affected by what happens in Greece. The euro has held the 786 of this last week's low to this week's high. From last week's low to this week's low was a 786 retracement. We've held that. We've rallied well over 100 and some pips. Coming into this meeting today that's going on, we could very easily move up several hundred more pips on some good news out of Greece, and that would take us up to a sell Gartley, up around that 136 level in the euro, and that would match up pretty well with what we're looking for in the U.S. dollar. We've been waiting for the U.S. dollar to get down to that 76 level, 76.50 level, which is a bullish Gartley. When you get a chance to go into Tiger TV and take a look at this, you'll see the beautiful AB equals CD pattern that completed up around that 82 level. We've had 1, 2, 3, 4 higher bottoms here. We've had several higher tops, going back for the last almost the last nine months or so. And so if we do get a move down into the U.S. dollar around that 76.50 level, that will certainly be a low-risk buying opportunity, in my opinion. The question is, if we get there, that's going to be the real $64 questions, because we are coming into a lot of news the next day or so. Frankly, this news is out. I mean, they already know what's going to happen. If they don't, they're going to be really surprised. And this is what the markets, they do surprise us quite a bit. So we'll have to keep an eye on that. This is what's really going to, really going to occur when these things, happen. So we just have to wait and see, with this to see what's going to, to come on. When I started the show, I talked about the gold and the silver. We've come back really strong in the gold from that bottom. We're getting ready to possibly, break out to the upside now from that 618 retracement. That would be a good sign because, the overall XAU is held extremely well at that bullish Gartley. So if you're interested in, looking at some of these from the long side, your risk is just under yesterday's low at the most. And if you're really conservative, you could put it under today's low if you wanted to. So if it, it's acting relatively strong now. This is what, if you're bullish, this is what you want to see. This is how we started the show to talk about it and these metals, because we have a bullish Gartley, no question about it, in the XAU and also in the gold bug index. And all they have to do is to hold above those lows we made just the other day when we had this big $100 down move in the gold and silver broke 10%. As long as that holds up, this market has a, potential, to move higher. So this is what we're looking for. Whether it continues or not, we have to wait and see. But it's very important, to watch this because all these numbers have come together for gold and silver, and this is, this is what we're here for. So watch these numbers, and because it is bullish, if it can, continue up and not take out the lows we made just the other day. That would be 1660 in the gold, and I believe around 3250, 3270 in the silver. So both of those will be interesting to watch if they can hold it up. Now, the price in the bonds that we're looking at in the June bonds, they need to stay above the 140 level. That's only 22 ticks away, which isn't very much. Especially with the jobs report coming out tomorrow. And, with the news coming out of Greece, there's going to be some, fireworks. And we haven't had much fireworks, folks. The stock market has only had 1% down move in the last 48 days. So, there's really not a lot going on over there. The currencies have been relatively quiet. It was only the gold and silver, the one day where we had the big, the big move. So we want to keep an eye on the rest of these, what's going to happen. And we'll have a new show for you on Monday. And I want to wish everybody a really great weekend and try to help somebody that has